Considered the eBay of accounts receivables. Today we're talking to the president and co-founder of a company creating a whole new online marketplace. I'm Chris Valerio. Welcome to Venture, the world of small business and big idea. The Receivables Exchange. That's the name of a company that's creating new markets in accounts receivable. And today we're talking to the co-founder and president of the company, Nick Perkin. Nick Perkin, thanks for joining us. Right. So explain to our audience a little bit about where you came, why you decided to get into this, or what it is exactly.
Well, I mean, at the face of it, it's actually a very simple concept. What we decided was that in today's world, accessing capital as a growing business, small and medium business, it took too long. It was out of sync with the reality of business. In the 21st century, business happens very, very quickly. So the traditional mechanisms of accessing capital, which can take 30, 60, 90 days, or going through loan committees, et cetera, it's out of sync with the pace, what we call the velocity of business in the 21st century. So what we looked to create was a commercial paper-like market, by which I mean a marketplace where small and medium companies go to access capital quickly, flexibly, at terms that make sense for their business. So we looked around, and what we found was that the most liquid non-cash element of a small and medium company's, of any company's balance sheet, are its commercial receivables. And so we looked at receivables and we said, well, couldn't this trade like an asset class? Couldn't this be a fungible asset of trade? And it turned out that it could be. So we turned the accounts receivable into an asset of trade, and we allow small and medium companies to pick which ones they're going to sell, figure out what price they want to sell it at, put it up onto our exchange, and then we have institutional buyers bid on them real time to acquire them. So the seller sets the price, they pick which invoice they're going to sell, they put it out for sale, institutions bid on them real time. When the transaction occurs, money flows to the small
And
company.
that's why we say it's kind of like eBay, because it kind of works like that marketplace. Why did you want to go into this area and kind of, I guess, legitimize it as what you're trying to do?
First of all, receivables are in the collateral in every commercial transaction, almost every commercial transaction you can think of. It's in, a line of credit. It's in, like you say, a factoring relationship. It's, we have a saying around the company, receivables are like air. They're everywhere. You just don't think about it.
Well, I read the statistic that you guys put out. Most businesses have 60% of their working capital. Is that right?
It's actually the largest credit product. It's bigger than mortgages, for example. So what we said was, look, let's take that marketplace and let's make it sophisticated the same way that other credit products are as well. Now, in our case, we're a sale of the asset, so we're actually not a loan.
Well, we're going to talk a little bit about that in a minute. I definitely want to get into that, but continue saying why you thought you could get into this area and get people to trust you.
Right. So it was a huge marketplace in the first place, right? It was somewhere in the area of 150 billion offline transactions and receivables. But the way that it was working was principal to principal. So there was no information share. So when you moved from one group, so whether you're moving from a bank to another bank, the goodwill, the credit history, the transaction history that you developed with them to say that you were a good customer was lost. So what happens in a centralized marketplace is there's information share. The buyers can see where other transactions were priced. They can see how well you've used the process. In other words, it's like a credit card.
It's a marketplace.
It's a marketplace.
Tell me, first off, who are the sellers of these accounts receivables?
Well, right now we have over 1,000 registered sellers on the platform. We're adding about 5 a day. So these are small and medium companies. They tend to have around 10 million in aggregate annual revenue, but we go as high as 500 million, and we go as low as 2 million. So it's a broad range of sellers. We're in 45 plus different industries. Primary industries, although they're not heavy concentrations, are manufacturing, media, technology, and services. But we're expansive in terms of the industries that utilize the platform, as well as in 48 different states.
When you started the company, because this was started in what year, 2008?
2007, we formed the company. We went live about 18 months ago.
So 2008 was when we had commercial paper, the huge commercial paper crisis. We had, breaking the buck was happening. Mm-hmm. How did that play into scaling this company?
We believe the fundamental principle was to provide the speed and flexibility of our 21st century capital to America's 21st century business. So that was the founding principle of the company. Obviously, with the credit crisis unraveling the way that it did, people were realizing, look, the traditional relationships that they had, that they've been maybe working on for 10, 15 years, weren't there for them. So every small and medium business thinking, do I really want to have a single point of failure? Do I really want to think about having all my eggs in one basket, or do I want to go to a marketplace where there's tons of buyers bidding on my receivables, where if one of them is not there, it doesn't necessarily affect my business.
But, okay, so I want to go back again to the practical aspect of this. You said most of these are growing companies. However, why would they be using this versus going through the traditional means?
A significant portion of our customers are using a line of credit in addition to using us, because we're actually the most flexible solution they can have. So few solutions out there allow the seller to actually set the price that they're willing to sell, put that invoice up for sale, and then have people bid on it, which ultimately can drive the price down. Typically in a sort of a one-on-one relationship in funding, the price is predetermined, and that's the price that you have. So ours is the only place where you can actually decrease your cost of capital over time. So I think the flexibility, the ease of use, the speed are reasons that people are coming to us.
So these are not companies that are, in serious need of emergency funding, or, I would think that that's one of the reasons that they want to tap that liquidity.
I mean, certainly some of them have, immediate cash needs, and their cost of capital will price accordingly. So all the information that's available to a buyer of the receivables.
Well, then let's go through that. So let's go through that a little bit. So you said at least $2 million in annual revenue. Also, they have to have bankable receivables. So they have to do business to business. You're not taking, obviously, from individuals.
That's right. No, there's no consumer.
You said what are the loan rates, and how do you decide them at this point? So they list their individual things, right? But how did the prices?
Well, they set the price. Typically, we see between 98 to 99 cents on the dollar. So that's roughly what sellers are getting for their receivables. Ultimately, it depends on the market and where people price it. So to your point, if a company is perceived as being in greater distress, that capital will price higher. And again, it's set by the market. We don't set the price.
So how big is the marketplace right now?
Well, ours is, the aggregate marketplace that we're looking to penetrate is
18 trillion, right? That's
17,
what I read.
17 trillion.
17 trillion.
So we're
huge potential.
Huge potential. We have about 1,000 plus registered sellers right now, adding 5 per day.
How big is your marketplace right now?
This year we'll do about $500 million in volume.
And you guys are having major growth. I saw 66% month-over-month growth in receivables sold in March. You guys took financing at the start of the year. You closed a $17 million round. Bain Capital, to give our audience an idea, they back LinkedIn, Redpoint Ventures, Tim Haley, Netflix.
Right.
And this is the latest of $30 million, is that right, in investment funds?
We've taken about 40 in total.
About 40 million, okay. So when you started the company, did you have that initial funding, and that's what you used to actually kind of bankroll the company to start with?
Actually, my partner and I bankrolled it in the very beginning before our A round. So we funded the first 6 months or so, and then took on institutional funding from.
And all of this institutional funding, what do you want to do with that cash?
Well, it's to grow the business ultimately. I mean, we're
so hiring people.
Yeah, it's these days it's mostly marketing focused, because it's really about people understanding the value of marketplaces and how marketplaces can benefit whoever the buyers or the sellers are in that particular market. In our case, we believe we benefit the small and medium company, and we believe we benefit the institutional buyer by bringing them together with this particular asset class.
Are you guys profitable yet?
At our growth rate, obviously, things are going pretty well.
Would you expect to start being able to see like cash flow positive in the next year or so?
Yes, absolutely. I mean, we're very, very well financed, obviously, with this last round of funding.
When you look at the environment that we're in right now in the United States, things are recovering. You're seeing a little bit of lending coming back into the marketplace to small businesses.
Right.
How do you think that that's going to, as we continue to come out of this recession, how is that going to impact your type of business?
We refer to that as a tale of two economies. And yes, what you are seeing is some lending picking up, but it's typically going to the strongest players within a space, the top 5%. You're still not seeing a pickup anywhere close to a pickup in the small and medium business category. They're still having a very, very difficult time. There's actually what we call a double credit crisis going on. Not only are they having difficulty accessing capital, but their customers, their buyers, are stretching out terms from 45 days to 60 to 80 days, whatever it may be. So the double crunch that they're in, longer terms from their customers, at the same time, harder access to capital. The situation, as we can see, is not improving. So certainly improving on the larger corporate side. They're getting more access to capital. Commercial paper market's still fairly dry, though. Securitization's still a fraction of what it used to be. So
and it's receivables exchange, hoping to get part of it.
Yeah, we think we're very well positioned, and we think that, again, we think we're the right solution for this time.